Good morning, everybody. This is Dibs256. Okay, this is one of my paper trading accounts through the TOS platform at TD Ameritrade. Let's see, I've got an iron condor on here, and I just kind of go through what I have on here. Looks like I'm 150 good on the total trade. 38 days left. 25 on theta. Okay, let's see here. Those are that. Rambus is up 7,500. 7,200, I mean. It's down. Okay, from I believe what we need to do is we need to liquidate the closing order on all that at 1388. Okay. Let's see what the well, no, we don't need to liquidate it. Let's see where trade price is 14. Let's see what the average price is. Well, trade price of 14 and 12. And it's at 1388. The average, which is, I believe is 1360. Yeah, 1360. So we're up what? 28 cents on 25,000 shares. So we're 7,000 to the good. So we're okay to sell that at that. It'll put us up in a profit. City legal. Let's see. 25. We got 25,000. We got that and that. Let's try to sell them individually and see what happens. I don't know why it's doing that. Must be something messed up with their software or something, because I mean it's showing that I have 25,000 shares. Nothing's tied up. Nothing. That's crazy. So let me sell those. Huh. That is crazy. I don't want to sell either one of them. Oh, it's got a working order already to sell them. Oh, I got a working order to sell calls on them. That's why it's not letting me sell that. So I'm going to cancel that. And now I can go in there and I should be able to sell those. It's always something. Always something little like that. So, see, we sold that. What we did was we got some cash back probably in the account here. Oh yeah, we do. 346,000. Let's see. We crunch down a little bit. Let's see, let's see, our 382,000 times 5%, 19,000. Okay, we can put another 10K in to the micron if we wanted to, which we've got. Let's see, quantity 4. Also, that's just covering that. We're up $170 here. 11 days, only 49 Just close that one out. Be done with it. I'll put us up a little bit more. Close that one out. This one here is gaining a little bit. Let's see. Okay. Alright, we'll just leave that alone for right now. Let's go to the other account. Let's go to the margin account and see what's going on there. Got 19 working orders, it looks like. Looks like 2 orders have been filled. USO. Let's see, we sold a couple. Looks like cash secured puts. We sold their naked puts, whatever you want to call them. Same thing. Let's say Apple is up 23,000 to the good. Let's see what we're up total. Up 764K. So that's still pretty good. What I've been doing here is I've been in the past before I started recording is I've been as these stocks become profitable over here in this section here, I've been just liquidating them, getting rid of them. I've noticed that I make more money with the iron condors, verticals, or just the options alone right here. This section right here seems to be doing very well. Some of my goal here is let's see here, anything over in this area here, $5,000 or more. A lot of times I'll try to either roll it out. Depends on the position. You know that right there has been working pretty well. I'll either roll them out, I'll cash them in. It just depends. Let's see, this one's up $7,000. Let's take a look at it. See, it's at 110. That means the option prices drop because the actual option is going. The stock is actually going up, so they're not going to put that to me at 10. So it's up 4 points. So that would be a good one to cash in and possibly roll out. Let's take a look at that and see what that looks like. That's for $8,000 profit. Come down here and turn that to a sequential, which what that means is it's going to run this first order first, and then if I chain them together, I put them good to cancel. Now if you do a market order, you have to have it just a day here. You can't do a good to cancel on a market order. Market order is only good for that day. That's things that you'll learn as you trade more. Well, since the options going up, so you can bump this up. See, sometimes just because the deal here is there, which means it might not be traded. It's probably at 15 or 20. Okay, I'm back. Let's we can go take a look at this one right here, the 15 for February, which is here, which is 39 days out. And the reason I want to take a look at that's on the put side, which is over here on the right. We have this thing called the extrinsic value, which is the 5.6 here. That right there is time value. Extrinsic is time value. Intrinsic is stock value, where if the stock's at of the $13 here, 8 of it, or 5.5 of it approximately, 5.6 is time value. So the other $8 is actual real value here. So that's how they get those numbers. But the best thing to do is when you're selling a put option is to make on this line right here. This is the main one you look at. Of course, you look at open interest and and volume of how many is being sold and so forth like that. But this number right here, the higher this number is the more time value you're selling it for. And usually it's right about in this range, right in here. So the reason that's probably still at that is because it bumped up, so which probably pushed this one up some here. But you can see also too that it's down 1.85, which is probably, for the weekend and so forth like that. The 2 days there, it dropped a little bit. So let's see, if I was going to sell another one, I could sell it here or here. Either one. I mean, there's a 2-point difference there, but also two from the two. There's a 5-point difference here. See that? So if I sell this at if I sell that 115, and then you minus 13.4, the break even is 101.6. See, they're not going to put that option to me unless it drops below 101.6, which is, so that'd probably be a pretty good one to sell. So what we'll do here is we'll just verify everything. Everything still looks good, up $8,000. So really what we're doing here is it's up 10 for today, so we were down probably like 1,200 from yesterday, or 1,100, or whatever the difference is between these two numbers here yesterday. So by selling this, we will generate in our account $8,000, which is pretty good for just a day of just leaving it alone, knowing what to do. And so we'll go ahead and do that, and the odds are it'll probably just go right through. Seeing it did. We bought it back, and then we sold the next one. Both of them were filled. So what we just did, if you come over here at account statements and look, we just spent $51,000, which made a $8,000 profit, and then we sold this one for $66,000. So really, our goal here is, as time drops, or as the stock or index, whatever this one particular is, as it goes up, when it goes up, this value here will drop, and that's good for us because we sold it for 66. Let's say we buy it back for 60,000. We just made $6,500. That may happen overnight. You don't really know. You just kind of watch this stuff. Now, what I like to do, is look at this right here, and I like to manage somewhat off of this here also. This column right here, it's profit year to date. It'll fluctuate, because if you're in this one too, this stock too heavy, or this one, like this one right here, we're probably in it just a little too much. 2% or 2.3 million of, that one right there's probably a little too high, but sometimes you get in them like that, and you still can make money. It's just you don't want to overextend yourself. So I think the goal on this one is about around 850,000 is my that's as much as I want in any particular stock or option play. Margin required, which you can see some of them are a little bit over, and some of them almost double. Some are like this one, in this case, from 8 to that's about 4 times. But it just all depends. But what I like to do is work off of this area right here, and by doing this, what we're gonna do is, like, SPX is down $3,000. So what we'll do is we'll come back here. We'll see our positions on SPX. That one's down 250. And put a SPX in here. Okay, we'll let that load. Okay, we'll go to the chart. We'll look at the chart and see which if we can tell what direction it's going to go or might go or anything like that. See, this is paper money, simulated trading. Let's see here. Looks like we got a little bump right there. Let's go back to trading. Okay, it's down today. Alright, let's see what positions we have on SPX. Okay, looks like we've got just an iron condor. And then we've got, let's see what this order is. We got this looks like to buy it back. Let's see, buy that, put back, yeah. Now see, if we would have had a call on this position, we would have been up maybe, maybe not quite 9,000. We could have been up 7,000, 8,000. Could have been up 10,000 if we would have had a call on this other side. So, as the, let's see here. Okay, well, let's see what we can do with that. Let's look at the, another thing too is, you're not, as long as you're playing both sides, like on this right here, you could sell a call option. We'll take a look at this position here and see exactly how far we're out or how close we're in or whatever. Okay, this is the position here. We're at a delta of 5, which is 95% probability that that's in the end is gonna make money. So the odds are started at 10. So this is a position here at 5. Okay, that's the iron condor we have. The other side. Okay. The okay, that's March. Let's see. Oh, that's February. Okay, that's what I'm. Looked at the wrong one. That happens to the best of us. Okay, we got the put side on. Okay, the put side's here. Okay, so that's kind of moved against us a little bit, but we have we got 60 some days, so we got plenty of time on that. What we want to do is come down here and we will write let's be conservative and just do it at delta 5 perhaps. Delta 6. Probably this one would be the better one. So we're going to sell a call option on that side. Okay, since we already have the put with the quantity of 25, if we come over here and we do 25 here, we'll do that good to cancel. That shouldn't well, it just messed up the margin just a little bit. But see, we generate $4,900. That's pretty good at being 5% out, because you got a 95% probability that that's going to be profitable. That's what the different, or 94%. That's what the delta does. As time value and all that, all the Greeks and stuff start working, it normally works out. So, of course, this isn't really a to teach you about the options or the or anything like that. Is just to show you exactly how I trade and why I trade the way I do. There's no sometimes there's no rhyme or reason. It's just like in this case here, it's 11 days out. We're 19,000 profitable. Up 17 today. I mean, it'd be kind of stupid not to pull that profit today, because tomorrow it could just go right back to where it was, and then you're at 2,000 profit. So, and you only have to, your net liquidity is only 20,000. This column here is really important, because that's how much you're going to have to pay to get that profit. Okay, if you follow me there. So what we're going to do is we're going to buy this one back. Okay, and we'll do a sequential order. We'll do an opposite order here, and then we'll look up here too again to see what we sold it for. We sold it for that put option at 78 cents. So we're gonna bump this out. I like to go usually with the third Friday, so we're gonna bump that out, and then we got it chained together here, so we'll go good to cancel. And what this will do is we'll pull that 18,000 profit here, and then we will resell this one here for probably around 40,000. It'll tell us here, see, 38,000. So we're going to pull that profit off of that. That's going to cost us that amount there to actually get it back to pull approximately $19,000 worth of profit, minus commissions and so forth like that. But see, by us pulling that, we're going to generate an instant 38,000 that's going to be in our account. So if that second order goes through, and you can see right there where we bought that one back, and then we sold that one instantly for the February month. So it'll come up here, and see what we've done there is we just basically rolled that out. We pulled the profit of 18,000, 19,000, whatever it was, and then we sold another one out into February, which is just just a little bit longer. So that's kind of where we're at right there. And right now we're broke even, but we're still only actually we could double this position here, because the 424,000 divided by let's say 14 million is only about 3%. So I've got, one of my goals is to stay within 5% on each particular position. So, but see, like right here on Oracle, we're on this side of the trade. If we come and look at Oracle, and we're let's see, is that where we're at? Yeah, that's where we're at, the position, the 500. See, so I could come in here and do another Oracle play right here at, let's see, 41. I could sell 500 here, calls at 41 at 18, and what that'll do is that only messes with $500 of margin. So it increases the margin by 500, but it generates me 82.50 here. So, but by doing that transaction right there, if it goes through, and it did, it went through. But by doing that transaction there, if Oracle goes up, let's say theoretically 30 cents, or whatever the other difference was on the other one, or if this price here just changes a little bit, I mean, I could make $2,000. I could make $9,000. It just depends on which way it goes. If it stays where it's at, if it doesn't go above 4, and two, people don't realize that when you sell a call option for 19 cents, your strike is 41. So really it's 41 minus 19 cents. So your break even is 40.81, which, I mean, the stock's trading at at that. So I mean, at 30, 39. So I mean, it doesn't really have to go up too much, but it'll have to go up. It'd have to go beyond 41 for them to call the position for me. I've never had anything called from me. Plus, that's within the 39 days right here. So the odds of that happening are fairly slim. Now it can happen, but you got 39 days. Even if you go into it, you can still roll it out. Roll it out to the next month. And if you rolled it out to the next month at 41, see, this one's from 19 cents to 49 cents. So theoretically, from 67 to 39, you've got 48 cents minus 19 cents. That's a 30-cent move. That's pretty good. So. But I think we're gonna end it there. I'm getting at 25 minutes on the timer here, and I think YouTube only lets me upload 15 minutes. So I'll probably have to cut this one into 2 videos. We'll talk to you later.